The 5-3-1 trading strategy is a popular approach used by traders to make informed decisions in the financial markets. It focuses on identifying high-probability trade setups based on specific criteria. The 5-3-1 trading strategy involves three key components: risk management, entry signals, and trade management. Risk management focuses on managing the amount of capital at risk on each trade, while entry signals guide traders on when to enter a position based on technical analysis indicators. Trade management involves setting profit targets and stop-loss levels to maximize gains and protect against losses. The 5-3-1 format in the English language is a structured approach to organizing and presenting information. It consists of presenting 5 main points, followed by 3 subpoints under each main point, and finally one key takeaway for each subpoint. This format helps to provide a clear and concise structure to communication, making it easier for the audience to follow and understand the key messages being conveyed. The first key component of a successful strategy is setting clear and achievable goals that align with the overall vision of the organization. This involves identifying specific outcomes that the strategy aims to accomplish. The 5-3-1 technique is a method used in strength training to optimize muscle building and strength gains. It consists of 5 sets of a given exercise, with the first set being a warm-up set, the second set being a moderate set, and the last 3 being heavy sets. This approach allows for both muscle endurance and muscle hypertrophy. The 5-3-1 trading strategy is a popular method used by traders to identify potential entry and exit points in the financial markets. One real-world example of this strategy in action is when a trader identifies a stock that has been trending upwards for at least 5 consecutive days, showing strong momentum and possibly reaching overbought levels. The trader then looks for a retracement or pullback over 3 days, indicating a potential opportunity to enter a short-term trade. Finally, the trader waits for a confirmation of the upward trend resuming over 1 day, using technical indicators and price action to validate the potential trade. Analyzing the benefits and potential drawbacks of a strategy allows for a comprehensive understanding of its implications, effectiveness, and potential risks. It helps in making informed decisions and devising contingency plans. The 5-3-1 trading strategy is a popular approach that leverages technical analysis to identify potential trade setups. To implement it effectively, traders should focus on identifying strong trends, confirming entry signals with multiple indicators, and having a disciplined risk management plan in place.